video, we're going to learn about the accounting equation, which will be the key to everything else that we do from accounting from this point forward. So let's start in the most simple part of this equation. Well, first of all, the equation is represented by the formula assets equals liabilities plus owner's equity. And what we're going to see is owner's equity is affected by revenue and expenses. It's increased by revenue and decreased by expenses. So let's start at the beginning. Assets are anything of value that is owned by the business and used in the business in order to operate. Some examples of that you'll see right down below assets: cash, accounts receivable, supplies, equipment, building, and land. You can see that these are all things that obviously have value to a business. Now on the other side of the equation, on the other side of the equal sign, we see the components liabilities, owner's equity. Let's just focus on those two things. What those are indications of how the assets were increased or decreased. So for example, we could acquire some cash by borrowing money. So we can see that both sides of the equation are affected by that. And under liabilities, which are debts owed by the business, we can see accounts payable, which is just a term that we'll learn later for money that we owe other people on a short-term basis, on a long-term basis, notes payable. And also we have another example of a debt, taxes payable. So anytime you see payable, that is an indication of a liability. So our assets would be increased by borrowing if we were able to buy equipment or supplies or borrowed cash. And then our liabilities would be increased because we would owe money for that. The other way that our assets can be affected is by contributions from the owner. And that is represented over here under owner's equity. So when an owner contributes money to a business in the form of cash, the owner's equity will go up in the same relation to how much assets went up. So you can see how this equation balances out. And expanding this equation out even further, we're going to see that owner's equity is increased by revenue and decreased by expenses. So when a business makes some money in the form of sales revenue, this will increase owner's equity, and it will also increase probably cash or accounts receivable on this side. So again, we can see the balancing of the equation. Some examples of revenue are going to depend on the type of business there is. Service revenue, if it was accounting business, accounting fees, rent income, so on. Now our owner's equity will be decreased by the expenses of the business, costs necessary to operate the business. Some examples of those are rent, salaries, expense. So if you are decreasing your owner's equity due to costs of the business, that is also going to have an effect on the other side of the equation under assets. If you had to pay cash to cover your expenses, your assets are going down, and as is your owner's equity as expenses decrease them. So I think we're starting to see how this kind of balances out. It's just a brief introduction to that. In the next video, we'll actually use a worksheet to take some transactions and practice with them. So please proceed to the next video.